Okay, once again, my name is Mensa Isaac, and today we are going to discuss single entry and incomplete records. So, as the name suggests, single entry and incomplete record, it means that we have an incomplete records in our book, and we have to use those records available to calculate for our net profit and prepare our balance sheet. Good. So, with this topic, you have to keep the accounting equation in mind, which is the asset equals capital plus liability. So if you want to find, and also our assets minus liability is equal to our capital. You should also know that assets minus liabilities is also equal to our net asset. So assets minus liability is also equal to our net asset. So the capital here can also be named as our net asset. Good. You also have to take in mind this formula. Opening capital plus profit plus additional capital minus drawings is equal to closing capital. Good. You have to put this in mind. So with this, when we want to find our profit, we can simply do change of subject. Our profit is equal to our closing capital then this will come here, it will turn to a negative sign, so minus our opening capital. This will come here minus our additional capital. And this will become positive, so plus our drawings. You get, so this formula has to be in your mind. Good. To find for closing capital, we add the opening capital plus profit, additional capital minus drawings to get our closing capital. So if we want to find our profit, we will simply do change of subject. Profit is equal to our closing capital minus our opening capital minus our additional capital. This will change to positive, so plus our drawings. You get it. So the actual format for statement of net profit or determination of net profit is our closing capital. We want to find our net profit, so it's our closing capital. Closing capital plus our drawings then we'll less our opening capital and additional capital. So our opening capital and additional capital. To get our net profit. Good. So you see, it's the same thing arranged in a vertical format. Okay. So to find our profit is the closing capital minus opening capital minus additional capital plus drawing. So I've just arranged them in a vertical format. So it's a closing capital here plus our drawings minus our opening capital and additional capital to get our net profit. Good. So this formula or format has to be in your head. Good. So in preparation of single entry, you have to know how to compute for your opening capital, and it's very simple. To compute for your opening capital, the question will be given to you. So you just check for the items that are starting the year or the balance BD of the items. Okay, so if we have, let's say, if A is an item, B is an item, C is an item, D is an item, we have 1st January 2020, we have 31st December 2020. Okay, and we have 500, 600 here, 200, 300 here, okay, and we have 400, 100, 100, 50 here, okay. We are just going to find the opening capital, and we know that for capital is asset minus liability is equal to capital. So if you want to get our opening capital, we are just going to less the opening assets, okay, of the items, then we less our opening liabilities from it to get our opening capital. Do you get it? So these are opening items. Let's say A, B, C are assets. So we are just going to add 500 plus 600 plus 200 minus, and let's say D is our liability. So we are just going to less 300, okay, from it. Then what we will get is our opening capital. Please do get it. So it's very simple computing for opening capital. You just have to come and list your items which has a balance BD or which starts the year, okay. So we know that you just come and check for assets that are starting the year, then you less your liabilities that are starting the year from it to get your opening capital. And when we want to find our closing capital, it's the same thing. You just come and find, we assume that A, B, C are assets, then D is a liability. So we are just finding capital, but we use the opening balances to find our opening capital. Then if you want to find closing capital, we are going to use our closing balances to find our closing capital. So if it's asset minus liability, which is giving us capital, then we'll list these ending items. We know that 1, 2, 3, A, B, C is an asset, then D is a liability. So if you want to get the closing capital, it's the asset minus liability for the closing of the year's items to get our closing capital. So in this case, we are going to get 400 plus 100 plus 100 minus 50, okay, to get our closing capital. Please do get it. It's very simple. Just look for your items that are starting the year, identify your assets and liabilities, less your liabilities from the assets to get your opening capital. If you want to find closing capital, just come and check the items that are ending the year or the balance CDs. Let's identify your assets and liabilities, less your liabilities from your assets to get your closing capital. Good. So that's all for calculating for statement of affairs, and you are good to go. So this formula has to be in your head. Good. So proceed on to the next. So for single entry, you have to know how to prepare your statement of affairs. Statement of affairs. Also, you have to know how to prepare your trade receivables control account. Control account. Also, you have to know how to prepare your creditors or trade payables control account. Good. Also, you have to know how to prepare your cash book. And also, you have to know how to prepare your income statement. And your balance sheet. Good. So these are the things that the single entry and incomplete records contains or requires you of. So first of all, as we say, statement of affairs as at 1st January 2020 or anything that they will give you, you will start or you look for your opening items, you identify your assets and liabilities, you less your liabilities from assets to get your opening capital. Good. Then you find your trade receivables. You come and for the trade receivables, we used to compute for our credit sales, okay? And trade payables, we use that one to compute for our credit purchases. Good. So with this credit sales and credit purchases is what we are sending into the income statement. So you don't have to get this computation wrong. Good. And your cash book, you also use this cash book to find your cash balances for which you are going to send into the balance sheet. So we don't joke over here. You just have to know that what you are doing is right and you are good to go. So now we are done with statement of affairs, and you know that for trade receivables account, any item that is going to increase the debtors balance will be written or recorded here. Then any item that is going to reduce their balances will be recorded here. Breaking it down, what I want to say is that if the debtors or the people owing us are paying their debts or reducing their debts, you have to record here. That's why cash received, when we receive cash from debtors, you could see that the debtors are owing us and they are reducing their debts, so we receive cash from them, so therefore we have to write it at the credit side. Since we know that at the credit side, anything that will decrease the debtors balance is going to be recorded here. So here, credit sales is recorded here because we know that when we make sales on credit to our debtors, it's going to increase the amount they owe us. Do you get it? So every item that will increase the amount of our debtors or the owings of our debtors will be recorded here, and any amount that is going to decrease the amount they owe us is going to be recorded here. It's just the same for creditors. Okay, trade payables account, we owe them. Okay, trade payables, we owe them. We the business, we owe them. So any item that is going to reduce the amount we owe them will be recorded here, and any item that is going to increase the amount we owe them is going to be recorded at the credit side. So any item that is going to increase the amount we owe them is going to be recorded at the credit side in the trade payables account, and any item that is going to decrease the amount we owe them is going to be recorded here. Using the same cash paid, when we pay cash to our suppliers or our trade payables or creditors, we are reducing the amount we owe them, therefore it is recorded here. Do you get it? That's why we could see credit purchases here. When we make purchases on credits from our trade payables or creditors, you could see that we are owing them more. Okay, so anything that will increase our trade payables balance is going to be recorded at the credit side, and any item that is going to decrease our trade payables amount is going to be recorded at the debit side. Good. So when we come to the cash book, we know that for the cash book account, any item that is going to increase our amount, okay, when we receive cash, okay, it's going to be recorded at the debit side. When we are giving out cash or we are paying something, normally expenses are recorded here because expenses, we pay for expenses, right? So you always see expenses at the credit side, showing that our cash balances is reducing. So when you see, when there's any item reducing your cash balances, it will be recorded at the credit side, and if there's any item increasing your cash balances or the amount of cash you have in hand, is going to be recorded at the debit side. Do you get it? And for income statements, we already know our formats already. So the only thing that will change here is we are going to use the trade receivables to complete our credit sales, and that's what is going to start in the income statement. Do you get it? Yes. And the trade payables, we use that to compute for our credit purchases. So when we come to the less cost of sales side, opening stock plus purchases, and we'll bring the amount we got in the trade payables account, and we will bring it under the less cost of sales. Good. And for our balance sheet, we know that already, that the format remains the same. Just that, as I said, our cash book balance, what we prepared in the cash book, and we had the balance we had in the cash book is what is going to reflect under the current assets. You get it? So that's all for the single entry, and that's all what you have to know for the introduction of single entry. And we'll proceed to solve practice set questions on single entry and incomplete records. See you in the next video. Thank you.